Welcome, Crypto Royalty members, to your fourth video module or video lesson, whatever you would like to call it. Now, in today's video lesson, we're going to be discussing fundamental analysis. Now, the reason why fundamental analysis is so important when it comes to playing a role in where the price is headed in any type of asset, let alone cryptocurrency, is because let's say you wanted to invest in Apple. And Apple, the iPhone, obviously everybody knows, but just in case you don't, uh, iPhone, iPad, MacBook, that's the company that makes. Anyway, so Apple, right? Just clarifying, you never know. You'd be surprised, you guys, about the things I hear out there. But anyways, let's say Apple is waiting. They announced to the news, to the press, that they're going to have a big press release, and that everybody should be listening. All investors who want to invest and who are already invested should have an interest in this news release. They're gonna have big news coming out, right? So if one Apple a share in Apple, the company, costs $100, right? Before this even happens, people before the news comes out are gonna start speculating whether it's good news, bad news. Why haven't they never done this before? This has to mean that it's bad news. So people start selling. Maybe they'll say, "Oh, this must mean that they're gonna expand even better news," and they'll start buying and pushing the price up higher. Now, that is really what you should be doing. It's all speculation, and I'm not saying gamble and guess. That's exactly the opposite of what I'm saying. What I'm saying is look at where the market's been. If there has been a previous uptrend, meaning if there was a previous bull run, just like we had in Bitcoin, understand that that happened for a reason. It didn't happen out of the blue, and eventually it's going to go down. And if there's a market's at its peak, right, and all of a sudden news is coming out, that is when the market can get damaged, because most likely, even if it is positive news and people start buying, the people who want to, how do I say this? People who want to take profit will liquidate their positions, and in order for there to be buyers, the people that are retail traders and don't understand how the market works are going to continuously buy even at the highs. Those guys are creating, excuse me, I completely butchered that word. They're creating liquidity for the big institutional investors, and that's what happened in Bitcoin. Now, what does this chart of Bitcoin have any relevance with fundamental analysis? Well, when a little something called CME futures came out regarding Bitcoin, that is when we took a plummet all the way down to around $7,000, even $5,000 per coin from 20,000 a coin that we were previously at. CME futures were the Chicago Monetary Exchange, or I forget exactly what it stands for, but something along those lines, right? And the Chicago Board of Exchange or Monetary Exchange, they started what's called, you could actually short Bitcoin, meaning instead of just buying and selling when it goes up and taking your profit or taking your money that you made, what you can now do is actually sell when it's at the top, or sell at any given point in time if you think it's going to go down, and you could actually bet against. I explained this in a previous video, but I'll keep explaining it because it is a little bit difficult to understand, especially to new traders. But for us who have been trading for a while now, we all know what shorting is, obviously. So you could actually bet against Bitcoin and bet that it was going to go down, and if it does, you get highly rewarded. Just like if you bought and went up, right? You make money, and then you would buy at the bottom and close out your position. But anyways, that that point in time was just around here. So can you see the significance that this fundamental news had on this particular coin, on Bitcoin? It went from $20,000 per coin. And the day that CME futures launched, all the big institutional investors, like I explained, I don't want to really get into it, but they started shorting. Out of fear, out of FOMO, people also started shorting, and that's when the price really took a plummet all the way to $5,000 in approximately a couple weeks, in a very short time frame. Now, do I recommend that you trade the news constantly? That you trade, in Bitcoin and cryptocurrency, there really isn't that much news unless you're dealing with an altcoin. For example, Ripple. Now, Ripple, I covered in my last video. I used that as an example. But Ripple is very volatile, has a lot of news, and a lot of news comes out on a daily basis regarding Ripple. So, at any given point in time, or a point in time, Ripple, if there is good news, bad news, there is no effect on the actual coin. Ripple, the company, and XRP, the cryptocurrency coin, are two different animals, as a guy named I forget his last name, but I think it was like John Mayer, not John Mayer, that's a singer, John or something like that. I don't know. I can't remember. But John something. He was the chief technical strategist at Ripple, and he said that Ripple, the company, and XRP, the cryptocurrency coin or token, are completely two different animals. Whether we have XRP or Ripple, the company was signing up multiple banks a week, hundreds of banks signed up, partnered with to use Ripple technology, and while that was going up, Ripple, the price of XRP, the cryptocurrency token or the coin, was going down. So there really is no correlation between things like that because it's such a volatile and heavily traded asset that the news has no effect on it. It's all technical analysis, and some coins are all technical and some are all fundamental. Like if news comes out that the United States is banning all cryptocurrencies, you better sell every single coin you have. Yeah, and that's probably never going to happen. That's like them banning the stock market, like banning a particular stock. That's not going to happen. But or it might. Listen, anything's possible. They could shut down the stock market if they wanted to. They could do anything. The government could do anything. But very unlikely that's going to happen. Uh, anyways, like I was saying before, what this is basically it's an indicator, okay? And I'm struggling. I'm at a loss for words because I don't want to make it too complicated. I can throw out these big words out there like it's your Fibonacci retracement zones, and you have to know when to trade the news from the 50% level. But you know what? I really don't want to. I don't want to confuse people because 90% of my students on here are all retail new traders, and they're not very familiar with these new terms, and that's why I want to help you guys out and talk as simply as possible while maybe throwing in a few big words here and there. And I'm not trying to offend anybody when I say this because I believe everybody that's in this course is very smart. And listen, they bought a course that'll potentially make them thousands of dollars. These guys, all of you guys that are in here, are very smart people. And I'm not challenging your intelligence by talking like this. The only reason I do it is because I just want to make sure everybody understands everything. And I talk like an asshole sometimes. I speak too fast, so excuse my profanity, but I do, and that's why I speak a little slower, and also I want to use smaller words so you guys can comprehend what I'm saying. So that's that. So guys, if the United States, like back to my point, if they come out and say we're banning all cryptocurrency, obviously everybody would sell their cryptocurrency. But if the United States government comes out and says, listen, cryptocurrency, we're getting rid of the dollar, and cryptocurrency is going to be a new form of monetary funds. You better bet you're going to bet that cryptocurrency is going up. Everybody's going to start buying it, and that's what's going to push the price up higher. So only major announcements like that are what really push the price significantly. But otherwise, fundamental analysis doesn't really have a big effect. Listen, it is more important than technical because technical is important more on a different scale, meaning it's only important when it go on intraday trading and also when to get in, when to get out. And so is price action and market levels. But also, guys, fundamental is also very important. You want to keep an eye out or an ear out in this case for very big news. But there is not to say that there's not fake news, and that's going to be your next video. The next video, Module 5 or video lesson number 5, is going to be covering fake news and how the media covers, how they manipulate the price through FOMO, and I'll explain to you guys all what that good stuff means. So, guys, go ahead, rewatch the video if you need to, take some notes, go on to the next video, and I hope you guys enjoy this one.